Good morning. This is Paul Donovan, Chief Economist at UBS Global Wealth Management. It's 7 o'clock in the morning London time on Thursday, the 29th of July. The official statement of the US Federal Reserve meeting yesterday did not add to markets' understanding of the policy outlook, as very little was changed. The press conference of Fed Chair Powell was inevitably the focus of attention. There is a problem with so much focus on the Fed Chair's statements. Markets expect economic insight and leadership from the Fed Chair because the Fed Chair has always provided economic insight and leadership. However, for the first time in decades, we have a Fed Chair who is not an economist. Markets may be expecting too much, therefore, especially as it is clear that the Fed is divided over policy timing. It does seem obvious that the Fed is on course to scale back its bond buying program. The media will want to portray this as being a withdrawal of stimulus, but that's not necessarily what is happening here. The Fed's policy has been to supply liquidity to meet liquidity demand. In that sense, the policy is not a stimulus, but an antidepressant. Liquidity demand that is not met by liquidity supply depresses the economy. There is no expectation that the act of scaling back bond purchases will cause growth to weaken, rather that scaling back bond purchases will prevent growth from overheating. German consumer price inflation for July is starting to come out of the various states. This number is going to rise sharply in year-on-year terms because last July, the great German VAT sales tax holiday began. So prices this time last year were temporarily and artificially lower. To get a sense of inflation pressures, one needs to look at inflation on a constant tax basis. Germany being as significant as it is, these numbers will affect the euro area aggregate. Because the increase in inflation will be very obviously down to a temporary base effect, the ECB is going to ignore the impact, as it should. There's nothing a central bank can do today to change tax rates from a year ago. Economists are powerful, but they're not that powerful. Spanish inflation for July is obviously unaffected by these tax base effects, but it will show the impact of higher oil prices. The US second quarter GDP data release is still going to be published on an annualized basis. Annualizing data is a polite fiction at the best of times, and it's a ludicrous practice when dealing with a pandemic, as it assumes that what has happened in the past quarter happens repeatedly for an entire year. This is not remotely realistic. The story should be clear enough, however. Consumers will have helped the US economy to accelerate as more and more states lifted restrictions on economic activity. Developed economy consumers had acquired considerable savings during the pandemic. And as consumers were forced to save money, this was not a voluntary process, they have inevitably rushed to spend those savings as soon as the lockdown restrictions allow. There will be attention to the PCE deflator in today's numbers as the broad price measure, but the Fed and most economists are very clear that inflation should be regarded as a temporary and very narrowly based issue in the United States. That's all for today. Have a good day.
UBS Chief Investment Office's investment views are prepared and published by the global wealth management business of UBS AG or its affiliate, UBS. This material has no regard to the specific investment objectives, financial situation, or particular needs of any specific recipient and is published for informational purposes only. As a firm providing wealth management services to clients globally, UBS AG and its subsidiaries offer both investment advisory services and brokerage services. Investment advisory services and brokerage services are separate and distinct, differ in material ways, and are governed by different laws and separate arrangements. In the USA, UBS Financial Services Inc. is a subsidiary of UBS AG and a member of FINRA SIPC. For information, please visit our website at ubs.com/working with us. For a full legal disclaimer applicable to the independent investment investment views produced by UBS, please visit our website at ubs.com/CIO-disclaimer.